Welcome to the Bak Up Podcast, a show on how technology is changing the way we live and do business. I'm your host, Ioannis Bakagiannis. Bak Up is ready to start. Hello. This is episode 2 of the Bak Up Podcast. Our guest in this episode is a dear friend of mine and a Swiss Army knife of machine learning research. He is a PhD holder from University of Toronto, where he studied hardware verification and acceleration. He is also a National Technical University of Athens alumni, where we met ages ago. Currently, he is part of Rotman School of Management as a postgraduate fellow working on machine learning in finance. His team is very active academically, so keep an eye at his Google Scholar profile. He is Zissis Poulos. Welcome to the show. Good to see you.
Hello, my friend Yanis.
How are you, man?
How are you? This is an old friendship right here. So I'm really happy to be here.
Thank you. As I said in the intro, can you tell us a bit more on your life journey to machine learning and like what drove you towards that particular part of engineering?
Yeah. So first of all, I had no plans at all to do any kind of machine learning, right?
As did everybody, I think that's a common denominator of like 99% of people working in AI and machine learning.
Yeah, you just stumble on it, right? It just happens along the way. So
that's something cool. I want to do this.
Yeah. That's quite common. Yeah, I've heard the story a couple of times actually, right? So I'm not that special, to be honest. So yeah, when did I? So we're both here in Toronto right now, right?
Mm-hmm.
I moved here 2011, just before the big crisis in Greece, which you actually experienced firsthand. Yeah. You were there, correct?
It was something.
Yeah, I was lucky enough to leave the country and arrive here a year before that, right? 2011. So I did my master's at U of T, and I was working on formal verification for VLSI circuits, right? So very large scale integration, right? Mm-hmm. So that has nothing to do with, right? It's like a domain in
hardware, let's say.
In hardware design, right? And the group I joined at the University of Toronto was one of the top groups in that field. Mm-hmm. And the methods they were applying were mostly, let's say, they were closer to exhaustive search.
Okay.
Right? There were formal methods basically perform exhaustive search, but they do that in a kind of intelligent way.
Okay.
So, yeah, at that point, I spent 2 years doing my master's, and towards the end of my master's, I realized that you could approach the same problem in a different way that allows you to scale better, right? Because when you do exhaustive search, exponential sizes is your biggest enemy, right? So as circuits grow in size and their representations grow in size, applying formal tools is not a pleasant job.
It's the same as an image, right? When you scale up from the full HD to 4K to 8K, you have to go through every pixel, and doing it all over again, it's hard, and that's why 8K screens are so expensive. Sorry,
exactly.
But please continue.
True, it's like more computation, right? More computation, and you still have to satisfy real-time constraints, right? So it's a very difficult job, right? So yeah, and I realized that maybe you can sacrifice some of the guarantees that formal tools give you and introduce some uncertainty in there, right? A probability, essentially, and at least be able to scale. At least be able to verify circuits and debug circuits that are much larger, even if you're not 100% sure that the circuit is correct or that you found a bug in the circuit, right? That's the end goal of verification or debugging of hardware designs. So that's what we were trying to do. long story short, I started applying statistical methods, and that's when that was my first. Um, that was the
Introduction
first
to machine
time.
learning.
Yeah, and I never looked back. I never applied a formal method in my life since then. But jokes aside, once I finished my masters, then I joined a social media analytics company as part of my PhD. So we
Yeah.
were also doing um, interesting things there, more on the applied side. Um, but so for example, influence estimation and maximization on uh, Twitter graphs and Instagram topologies and so on. And then
Yeah, very data science tasks, right?
I'm more on the data science side. And at the end of my PhD, I continued doing machine learning for verification and social media analytics at the same time. And then the first year of my postdoc, once I finished the PhD, I jumped straight into deep learning acceleration.
Yeah.
Again, at the University of Toronto. Did a tenure there for 2 years of doing that. Uh, and then I joined the business school at the University of Toronto,
Yeah,
Rotman School of Management.
at that group where you were part of a conglomerate, right? And you were in the
Yeah.
committee with Yoshua Bengio, with like superstars of the game, right?
Yeah, so it was a strategic network as they call it. So basically the government supports big projects like that where you gather, I don't know, 15 to 20 professors around universities in Canada, Vancouver, UBC, for example, University of Toronto, University of Montreal, McGill, McMaster, Simon Fraser, and these professors, this faculty, along with their students, they come together and they design a plan, a 5-year long plan, which is basically a research plan
Mm-hmm.
that involves a lot of collaboration. And the idea is to combine ideas and combine the intellectual capacity of different groups and their resources to push the envelope uh, for a particular technology. And this network happened to be in deep learning acceleration. So there were professors, as you mentioned, Yoshua Bengio, Christopher Powell, and so on, and also professors at the U of T, Kyriakos Koutoulakos, and so on, that were the AI experts
Mm-hmm.
or computer vision experts, AI experts, machine learning experts. And then there were professors and their groups that were experts in hardware design, high performance computing. And then there were professors that were experts in middleware, let's say.
Mm-hmm.
And so the question there was, what can we, throw everyone in there and try to figure out what's the best thing that can come out of it.
Yeah, and I really like how you pose it. We have like a moonshot that we want to achieve, and we gather the best available talent out there and try to accomplish it.
Yeah.
And so and I'm a bit astonished on your breadth of knowledge and positions. Um, but having so many different let's say weapons under your belt, um, what do you think that gives you an edge in the academia and or in industry at the same time about doing machine learning? How like variety of knowledge domains, let's say, help data science and machine learning in general?
Yeah. So, yeah, that's a good question. Um, Honestly, I never thought it that way. So, um, I never planned to develop breadth instead of
Mm-hmm.
depth. It just happened along the way, right? My goal was, yeah, as you know, we've discussed it offline that I'm interested in academic positions.
Mm-hmm.
Usually, the suggested path towards that is learn how to do something and do it really, really, really well.
Yeah,
right?
traditional, right?
Traditionally,
Yeah.
but that's definitely not what I'm doing. If you think about it, so uh, how has this affected so far the academic journey? I would say, well, breadth does what breadth's supposed to do. You're able to work with different teams, right? You're able to see an opportunity and take it,
Mm-hmm.
right? Even if that means that you have to move outside your comfort zone, and I'm okay with that.
Yeah.
But of course, and again, what's the benefit? You get a lot of friction. You get to interact with many different groups with different mentalities, different approaches, right? Um, and you get to see a lot of different applications.
Mm-hmm.
You get to see a lot of different. You get to talk to a lot of different experts. Uh, and
Yeah, because for example, at RBC, at Royal Bank of Canada, where I work,
yeah.
it is heavily encouraged to go from department to department, from role to role, just to
Hmm.
get a better understanding of how the bank works and how different teams work and operate. And I would assume that something similar would happen in the academia, and especially in a field as broad as machine learning, because machine learning, I think, is like a tool, right? That you use it towards some other goals.
Yeah, it's exactly what you're saying. There's so many applications out there, right? And there's so much fertile ground for that. And it's not just computer vision, right? Which is the traditional, it's the low-hanging
Yeah.
fruit for many, right? And that's what we're doing at Rockman School, Business School, um, at U of T. The idea is, listen. There's so many tools out there, and this particular domain, machine learning, AI, and so on, that we haven't really explored as a business school. And it's not just Rotman uh, that's doing this. It's all other business schools in Canada and abroad. They've realized that there's a lot to gain from the intersection of finance, business, economics, and machine learning, AI, and so on, right? So now they're trying to enhance their programs or build new programs that that will push towards that direction on the academic side, because the industry is already ahead of it.
Hmm.
The industry in that particular, applied machine learning for finance or economics, and then for business insights as well, is already a thing in the industry. Now
Yeah.
it's done in a kind of a fast food chain way, right? Uh, but it's already there,
Hmm. At
and
least the tools, yeah.
there's a lot of inertia. There's a lot of inertia in universities, right? If you want to build a program, let's say that's data science slash finance, it's not. You don't have you're not agile as a startup or a small business or even an enterprise at the enterprise level, right?
Hmm.
You need this. It's more regulated. You need to do proper budgeting. You need to be able to invite students. You need to. It's a slower process,
Hmm.
right? So it's reasonable that universities are slow when it comes to adopting machine learning in finance, or even other industries, right? But it's happening, and that's why you need breadth, right? You need to have business understanding. You need to have background in finance, economics, machine learning. It's a tool that you need to be able to apply, right? And I don't know, unless you're doing fundamental research in machine learning, I think breadth is the way to go, in my opinion.
I couldn't agree more, and I really find people with a holistic, uh, let's say, worldview, more easy to communicate and talk to. But talking about breadth of knowledge, you were recently in the organizing committee of the IEEE International Conference of Blockchain and Cryptocurrency. how did
Hmm.
you even got into blockchain? Like what was the interest there?
Yeah. So yeah. So yeah, that happened several
It's
years
not it's
ago.
not an easy thing to do to be in the organizing committee of such a high profile.
Oh. Oh. Okay.
Uh,
Well, you just have to know the right people.
ah, sure,
But
but again, you have to start somehow. So how did you end up? How did you discover blockchain technologies and how you were involved? And mind you, I don't really want to spend too much time on this, but I thought it was a cool nugget that you were
mhm,
part of the organizing committee, and I wanted to
yeah,
pick your brain for a bit. We could have like a 5 episodes about blockchain, but
for sure.
let's keep just for the conference right now.
So that happened. The first time I heard about blockchain was many years ago, for sure. But I didn't pay too much attention to it. And it was only uh, when Vitalik Buterin came up with the concept of Ethereum here in Toronto,
Mm-hmm.
right? That starting paying attention to it because as a technology, it really excites me. It excited me back then. It still excites me right now. And I don't I I'm not particularly biased towards uh, the type of technology you're going to use to solve a particular problem. If the problem calls for a particular technology or if the solution is there, so be it. Whether it's machine learning, whether it's blockchain, or whether it's some traditional existing technology, it doesn't matter to me. Uh, but when I see technologies that promise to solve big problems that can impact society at every level, then I do get excited, right? And that's true for machine learning. It's also true for blockchain. So the fact that I'm into blockchain is not surprising for me since I'm already into machine learning.
Mm-hmm.
Right?
Mm-hmm.
Why wouldn't you not be? Why
Yeah.
wouldn't you want to be into technologies that have the potential to change the world? Right? I don't see I don't see them as being mutually exclusive at all.
Yeah, I can see definitely your point there. It's like something very cool. It's something very uh, shattering. Like it can cause paradigm shifts.
Hmm.
And I'm all for it, 100% for the same reasons as you mentioned. Um, uh, from the particular, did any theme caught your interest during
Oh,
the conference? There was there like a top trend that we should follow in the next couple of months?
well, it's blockchain is still uh, in stage one, let's say.
Mm-hmm.
All right, it's a technology that needs to mature, and at this point, there's not a single takeaway, right? Whenever you join a conference or whenever you participate in a seminar or a big event around blockchain where a lot of experts gather, there's so many dimensions which need to be addressed around that particular technology and the problems it's attempting or promising to solve that there's not really a single takeaway. Plus, it's quite multidisciplinary, right? So you can talk about uh, technical aspects, purely technical aspects, such as, for example, scalability, right? How do you make this technology scale to so that it can perform transactions as fast or with the throughput of Visa or PayPal and so on,
Mm-hmm.
right? So that's a technical component that is always of interest, right? But then you have to, if you're interested in the legal aspect of it, you can look into regulation, right, and see what's the path towards adoption, right? And how do you lower the barriers of entry for startups that want to adopt this technology, or adoption of the technology, you know, by the average
Yeah, consumer.
consumer,
Yeah,
right?
let's say stores, people.
Yes, exactly. Uh, and there's discussions as well, other technical discussions in terms of security, privacy. There's also applications that are discussed. For example, how can you use blockchain as a backend to secure your data or to protect ownership of your own data and so on. But the biggest takeaway for me is that there's a lot of work to be done to even be able to talk about tangible progress.
Okay.
Right? The good news is that a lot of experts are paying attention. Countries are paying attention. Governments are paying attention. Big tech giants are paying attention. So, for example, the international conference on blockchain and cryptocurrency, which is the one you're talking about, that took place beginning of May. It was virtual, of course,
Of
because
course.
of the current situation.
Thanks to Zissis, by the way.
Thanks to a lot of
A
people.
lot of people, but Zissis in particular.
No, I can't take credit for that. I can take
I'll give it to you. I'll give it to you. Don't worry about it.
So thank you. So if I tell you who was participating, you'll realize that this interest from everywhere. In Internet of Things, the Bank of Canada was there. Facebook was there. They were promoting Libra, right?
Libra, yeah.
Vitalik Buterin was there, of course. It's Ethereum. So again, it has the potential to impact supply chains, the potential to impact security and privacy, marketplaces, e-commerce, digital currencies. Right? It's not just. I hate to see blockchain associated with cryptocurrencies and only. Right? Cryptocurrency is one application.
It's one application, yes.
Of the blockchain backend. Right? Crypto economics is a very important aspect of it, but we shouldn't really be.
Yeah, these two are getting intertwined, but let's not get into too technical
Yeah.
here, because we're gonna get away from our original topic of machine learning.
Yeah.
And on that topic, actually, can you let us know what are your latest research, and what are you planning on releasing any papers soon?
Yeah. So when I joined Broadband, that was a year ago, almost a year ago. And the idea was, okay, we have a lot of we have this set of problems that we usually address using econometrics, let's say, or traditional methodologies and regression and so on. And we have so many interesting research questions that we want to pose, and we want to see whether we can figure out the answer or go closer to the true answer using machine learning technology, right, or AI and so on, broadly speaking. Right. So when I joined, we sat down with several researchers and professors, and we started activating or investigating and exploring whether we can apply machine learning in specifically 3 topics. So I'm going to mention that we've been working on reinforcement learning for option hedging, right? And I can elaborate on those, or we can pick one if you want, and we can just.
I don't think we have time for all 3, but we're definitely gonna pick one.
So we've been looking into reinforcement learning for option hedging. We've been looking into using a pure end-to-end deep learning for exotic option pricing. So those 2 are basically in the financial engineering domain, right? And another topic which I find very interesting as well is we're looking into the impact of the quarterly earnings calls and press releases, of the impact of these announcements on the returns of a particular firm, and we're looking into this impact in the short term and also in the long term. So, in other words, is there anything in the uh, quarterly reports that those firms release that can predict the market reaction the day after the announcement, or like 30 days after the announcement, 60 days after the announcement, and so on? Right, so looking into short-term and long-term impacts of that. And
Yeah, and before you continue, because I'm not very familiar with these earning calls and what is being discussed, but always in any economics news channel, they have this. Oh, this is earnings call day for most. I don't think all of them are synchronized, but some of them are synchronized, and
mhm,
they are. And it's are they made by analysts, and
yeah,
these calls, I know that they for sure they have some impact on the
mhm,
price and the outlook, as they say,
mhm.
of some stocks.
Yeah, so companies, right, the firms
Hmm.
are obliged to release their statements 4 times a year,
Hmm.
right? So in every quarter, Q1, Q2, Q3, Q4, uh, they will uh, they will do their press release, right? And the press release will have a summary of all the statistics and the performance of that particular firm, gathered in tables, slides, and so on, right?
Hmm.
Now, they're not necessarily synchronized. It doesn't mean that every firm will have its press release at the same time as every other firm. That is, it's usually the dates fluctuate, right? They're not. There's no standard there. The times are usually similar, right?
Hmm.
It's before the market opens, while the market is active, or after the market is closed. But in any case, the press releases are also usually accompanied by an earnings conference call, right? Well, where you have two sides. You have, it could be a Skype call like the one we're doing right now,
Hmm.
right? So
Well,
where you have,
right now it has to be.
yeah. So exactly, right? It's usually a conference call. So where you have the executives on one side,
Hmm.
right? You have analysts on the other side,
Hmm.
and so the executive, like for example, the CFO, the CEO, some VPs, will start talking and basically summarizing the company's performance for that particular quarter. They're gonna discuss some. They discuss some of the hard metrics, right? Maybe there's a little bit of speculation, usually sometimes creeping in there,
Hmm.
although they can't always say whatever they want to say, right? And then this first part is followed by a Q&A session, right? And in the Q&A session, the analysts are posing the questions, and the executives are providing answers. And you can imagine that uh, this is where we're looking for the juice, essentially.
Yeah, can they ask whatever they want?
Uh, well, effectively, yes. Right?
Dude,
As long as it is a relevant question, they can ask.
I'm guessing they're not gonna ask about their family situation or are you single or not. But
How's that lawsuit going? No, not unless it has to do with the firm, right? So
okay,
if
so can they can okay, I'm gonna ask for example like a very straight question. Are they obliged to answer all the questions, or to what capacity are they obliged to answer specifics, especially?
they don't want to answer, they will just provide something that's not an answer. They will just say
Okay.
something. But well, this is another interesting topic of discussion. But maybe I don't want to talk about it right now. Maybe we can talk about it a little bit later, where we're trying also to see if executives or managers are on purpose increasing text complexity, or like the speech complexity, then
Uh,
transcribed into text to obfuscate bad performance. This is a legitimate question we're posing sometimes.
Yeah, and I would say from my experiences, I've been in rooms that somebody could talk for 30 minutes and say
And
nothing.
say nothing, yeah?
Yeah.
Or basically contradict. So
Uh,
if you could summarize the 30-minute uh, speech they're giving, it could be collapsing into two sentences, and those two sentences are contradictory.
you know what it reminds me? It reminds me Pythia in ancient
Yeah.
Greece. It's
Mm-hmm.
like it was a famous like they were trying to predict the future, but they were given contradictory responses, and when you put uh, like the commas would make a difference in what your future is gonna be. So it was so ambiguous, and it's always correct. By the way,
Yeah, yeah.
yeah, I think it's a funny tidbit.
It's almost like patent language, so you can and you can easy to breach. But
So yeah,
anyways,
let's dig deeper a bit into that area of research of yours. So earnings calls and trying to do what with them actually? Try to predict the change in stock price in well, we've seen the performance change in what exactly? What are the metrics that we want to predict and or be intelligent about?
yeah. So first of all, okay, I'll say it and then I'll elaborate. Right.
Okay,
Uh,
makes sense.
it depends who you are. If you're an academic, you're interested in different things. If you're in a hedge fund, you're interested in other things. You're interested in money, right? Um, in academia, we're naive, so we're philosophize too much and try to figure out other stuff. But
I believe you.
let's say for now that the end goal is to if you're in the industry, if you're in a hedge fund, your end goal is as follows: take all the data you can from this earnings call transcript, because the discussion is transcribed, right, and placed into text or XML format or PDF, anything. Right? Take as much data from it as you can and try to predict, let's say, the immediate return, right? The return the day after the earnings call. Okay,
Mm-hmm.
that's one thing you can do. Uh, in in the academic setting, specifically what we're trying to do is we're asking the following question: what in the earnings call transcript predicts the return? So there's a difference here, right? So one is basically trying to say, I don't care what you're going to do with the earnings call transcript. Just try to see if it can be a good predictor for the return the day after. In the academic setting, we're trying to figure out what in the earnings call transcript is a good predictor of the firm's price, stock price behavior, not only short term, the day after the earnings call, but also in the longer run.
Mm-hmm.
Right now, traditionally, um, the first thing you do, right, and this has been done for more than a decade, right? You would take advantage of sentiment analyzers. Usually, that's the low-hanging fruit, right? So it's not uncommon that you will do sentiment analysis for news, or Bloomberg News, Twitter, earnings call transcripts, press releases, right? And use the results to inform a trading strategy, right? So you get these firms for which the earnings call transcript had a positive sentiment, and you go long on these firms, on these stocks,
Mm-hmm.
and you rank them based on negative sentiment. The ones that have the you know the worst kind of sentiment, you go short on that, right?
Mm-hmm.
So yes, I mean that simplifies it, but this is what you would do if you want to build a trading strategy, right?
All
But
right.
that's not what we're
So
trying to do.
why do you need an algorithm? So can't you like attend the meeting and say, oh, it was a very positive meeting, and other than
Well,
scale, that you
mhm.
okay, I want to like know the earnings call of all the, I
Exactly.
don't know, 8,000 earnings calls that there are this quarter,
Yeah.
and see what are the positive ones, what are the negative ones, and make like a bet on each one of them based on sentiment analysis.
You could do that. Yeah. You could do
Uh,
that. But
so what will be like is uh, the jump, let's say, in price justifies this the use of models?
so yes, you can do that. But in the era of algorithmic trading, you may not be able to afford doing that.
Yeah, right.
So exactly. So what you can observe sometimes is that sentiment information is rapidly incorporated into pricing. Right. So this is an argument towards market efficiency. Right. It's not easy to measure, but we also have plans to be able to measure that, right? By using sentiment index to
Mhm.
see if this kind of information was incorporated more efficiently, is incorporated more efficiently nowadays versus 10 years ago or 15 years ago, right?
Interesting.
But our goal is not to build a portfolio strategy, right?
Okay.
Our goal is not to build a trading strategy, right? Our goal is to um, be able to answer questions like the one I just mentioned. Are markets efficient at capturing sentiment? Are incorporating the sentiment information into the price quickly, right? So if we know that high return stocks are associated with like positive, very high and positive sentiment earnings calls,
Hmm.
and this information reflects immediately in the day after, right? We know that the market we can hypothesize that the market is efficient at capturing this information. But if we go back in time 15 years ago and see that it takes some time to incorporate this positive sentiment during the earnings call
Hmm.
during the earnings call, and it takes a few days to incorporate this kind of information, then it means that the market was not as efficient back then. And
Interesting.
the hypothesis is that now all these algorithmic trading processes leverage sentiment indices, right? And they digest a lot of data, and they use sentiment indices as one of the variables for informing their trading strategies, right? So it's the hypothesis that now sentiment information is rapidly incorporated into market into pricing.
uh right, but uh, as far as I know, and correct me if I'm wrong, you can do sentiment analysis not using like the latest AI and machine learning tools like deep learning or whatnot. And sentiment analysis has been around in I don't know how many decades, right? What makes that field good for studying and incorporating machine learning and deep learning there?
Well, you'd be surprised. They have, I mean, in the finance world, it's only recently that the topic modeling and sentiment analysis has been part of published work. As I said, the industry has adopted these techniques before, but
Mhm.
even the basic machine learning tools haven't been really tested in an academic setting yet, right? Only very
Mm.
recently, right? So yeah, I think there's a lot of fertile ground to see what you can do there. We're using machine learning as a tool, all right? And whatever model we think is the appropriate one for the data regime we're operating in,
Mhm.
we're just going to do a proper model selection and choose the one that will be the most informative for what we're trying to answer, right?
Mhm.
So I mean, when we do the earnings call transcript analysis, we're not going to throw a transformer in it without even, you know, thinking about
Looking
it.
at it, yeah.
Yeah, I mean, yes, we're not simply going to take the state of the art model and just see what happens, right? We would in
It
finance and
would be an
economics.
approach. I wouldn't lie. It would be an
Oh,
approach.
we've done it already. So this is usually when everything else fails. Use a transformer in natural in NLP.
By the way, I would like to explain. Like Transformer is the state of the art model that has been introduced the past year. I think in 2018. I think it was the first paper that went out, and since then everything in that includes text is being done through a transformer. Thanks to Hugging Face lately.
Mhm.
Shout out to that company. They're doing an amazing job about transformers. So let's continue though to the earnings call. And yes, you can do, even I, like as a simple human being, can sit down to a call, see, okay, that was and through my perception, say, okay, this is a good call. And the numbers, not even the numbers, even if the numbers are not solid, if I'm sold on the company is doing well, I'm gonna be bullish on it, and I'm gonna put my money on that particular company. But it can be, I don't know what's gonna happen in 30 days, if 30 days after, or 2 months after, or in the long run. Is there any indication, or have you seen anything that introduces like a relationship between the earnings call and a long-term success of the stock?
Yeah, that's a good question. That's exactly what we're trying to figure out. So I don't have an answer for you right now, right? But we're if we assume that if the hypothesis is correct that sentiment is incorporated quickly and it's all you can, it's incorporated quickly and you see it reflect in returns the day after, then maybe you shouldn't just be looking into sentiment, right, to explain behavior that appears later on.
Mm-hmm.
And so we're looking into, for example, discovering topics in the earnings calls that their existence or absence can explain some behavior later on, right? So maybe something about a lawsuit or litigation, or I mean, it's hard to tell. We don't want to introduce any human bias as to
Mm-hmm.
what we think is a
Mm-hmm.
topic that creates a delayed uh, effect in the return, but we want to discover it mostly in an unsupervised manner. Right? So that's why we're looking into topic modeling techniques, and um, it's still, I don't have an answer for you, but we're definitely looking at this. And I think it's where, I think in terms of in the academic setting, that's a more interesting question, right? In other, because then you can take it one step further, which is also what we want to do, and ask, where should we be paying attention where we when we read our earnings call transcript or when we attend an earnings call, right?
Yeah.
Because if apart from sentiment you discover inf- information and content in earnings calls that usually has a delayed impact in returns, and you see that this is quite common across different industries and sectors and so on, then you can just have a more effective way of understanding these calls, right? Whether you're a machine or whether you are a human, right? Where should investors be paying attention, or where do they pay attention already?
Yeah, and I meant to ask you. I've written it down. Um, uh, like myself, I would more be interested if I was looking at the long run. I would look at, for example, strategic initiatives, adoption
Mm-hmm.
of new technologies,
Mm-hmm.
being innovative, taking market shares left and right. Right. That would be s- uh, s- stuff, like words that could have an impact on numbers at some
Yeah.
point. Right.
Yeah.
And that's why it makes sense when you said topic modeling, to be one way of, okay, uncovering these things, and look, companies that did well in the past had these topics in common. So
Mm-hmm.
these topics would be an indicator of the time that companies, for example, let's say cloud technologies.
Mm-hmm.
Some companies were early adopters of the cloud,
Mm-hmm.
native cloud, and that was introduced in the earnings call. I don't know if they were, but let's assume that it was. And these companies were propelled, their stocks skyrocketed because of that.
Yeah, good point. Good point, and I think that would be able to explain uh, um, outward trends, right? For those particular firms that adopted these new technologies. But one interesting thing is that all these things have seasonality in them, right? When they're not, they're also non-stationary, right? So maybe adopting a cloud technology now, it doesn't say anything versus adopting it 5 years ago. So you have to be careful with how specific your topic is, right? And
Yeah.
what can so extracting the proper semantics is not as trivial, and that's why it's quite interesting, right? So
Yeah, it is hard because words are the same. Maybe meaning changes or
exactly.
effect changes through time.
Exactly. And but to what you're saying, one of the standard ways I'm going to go back to sentiment, but one of the standard ways um, of performing sentiment analysis years ago was by using this lexicon by Logren and MacDonald, the LM lexicon,
Mhm.
where they would just collected, they're experts in the domain, right? So domain level domain specific
Mhm.
expertise helped them build this lexicon, right? So they had 10,000 words, and they would just say, well, for that particular domain, the domain of finance and earnings calls and press releases and Bloomberg news and so on, that have to do with finance. These words mean something positive. These words mean something negative, and these words don't mean anything, right?
Mhm.
And there's some other categories that don't relate to sentiment. But this lexicon, right, the words that were positively charged versus negatively charged would change across time, right? So it would constantly update, right? So this is just an interesting fact that points to the seasonality of all these things, right? Which is not, you don't see that effect in computer vision, right?
Yeah.
Maybe you see it, but it's not. You have to go back to images from World War II to
Well,
see some
a
sort of,
dog is a dog, dude. A
yeah.
dog is a dog. It's not gonna change much throughout the years. Or a cat
Yeah,
is a
okay.
cat.
Yeah, I'm sure that a car, one of the first cars, would be tough to recognize right now. But still, you have to go decades
Four
back.
wheels. It still has four wheels. I would classify it. If I was a classifier, I would classify it as a car.
Yeah, probably a human expert definitely would figure that out quickly.
Yeah. But on the same subject, I don't want to go away from earnings calls because that's very interesting. So what happens? And you mentioned it earlier. What happens right now if some person in the call from either side is being misleading or is trying to create sentiment that is not there, or create hype or downplay something because they want to affect the stock price in an upwards or even a downwards trend sometimes.
Yeah.
Yeah.
So the answer is to automatically determine that it's very difficult, right? Whoever investors that participate in these calls or read the transcripts after they're published, they, they can read between the lines
Hmm.
sometimes. Okay, machines cannot. It's not that easy, right? So to figure out whether someone the and that's especially true in earnings conference calls, right? When you do a press release, the things you're gonna write are very strictly regulated. So you can't speculate, and you can't downplay things. It's you have to produce this 2 3 paragraphs, and everything else is basically disclaimers and then tables, right? So you don't have a lot of room to start manipulating the reader.
Hmm.
uh, and but in conference calls, yeah, it's wild. It's the wild west, all right. and that's why it's a challenge. That's why it's interesting. So to be able to an experienced investor would be able to figure out if someone is trying to downplay an issue or try to, if an executive is trying to obfuscate bad performance or um, manipulate the investor, right?
Mm-hmm.
Or as we said, avoid answering a question. And sometimes investors don't even pay attention to the answer. They pay attention to the question. The question sometimes carries a lot of sentiment, all right, and a lot of information as well. But those are not things that are easy for a machine to extract. Okay, and this it's also part of a game. If the let's say that the executives have figured out a way to obfuscate bad performance or uh, uh, make good performance look even better than it is, and it works for now. And then there's machines that can figure out when they do that. Will they change the way they're? Will then the experts change the way they're doing it to be able to beat the machine,
Yeah,
right? And we're trying to figure out if also that's the case, right? So this is you see in academic.
chicken and the egg, right?
Yes, it's a game, right? And we're also trying to figure that out. Like, has text complexity or the things that managers say and experts and executives say, have those things increased in complexity because they're trying harder and harder to beat the machine, right?
That would be really interesting if they're purposefully prolonging
Oh,
their words.
they
Uh,
are, they are because I think they are because they know that these things are parsed dynamically and they're digested into algorithmic trading machines for sure.
So on that topic, because when I was looking into machine learning and trading or stock prediction in general, the biggest barrier that I found was the speed of the inference. How fast can I make a prediction and actually act on top of it?
Mm.
Right, so I know algorithmic trading is hella fast. That's it's really fast. That's why it's the appeal to it when they see those small signals, those trading signals as they call them. They act upon it, and whoever has the better hardware usually wins. uh so and uh, from what you're saying right now, somebody could manipulate that from the actual call to do something, even though he or she is a human, can manipulate the model, since it's a very simplistic model, since most, not most, all algorithmic trading um, machines are rule based. I
Mm-hmm.
wouldn't say all, like
Mm-hmm.
most of them.
Mm-hmm.
uh, is there a chance for a machine learning algorithm to act in between the human and the algorithmic trading platform, to take advantage of both of those strategies?
To take advantage of both strategies and also trade itself. What's
Yes.
the end goal of the machine?
Yes, the end goal is take advantage of how these playing like a zero sum game. This playing like a
Hmm.
game together, and the machine learning algorithm can work on top of those interactions.
Yeah, the question is, you would need a lot. I mean, how do you build that model, right? You
I
would
have
have
no
to.
idea. I'm just asking you as an expert.
If we manage to build that model, maybe we can just do a few more of this podcast and then
Go.
go build a startup. But
And print
it's
money.
legitimate. It's legitimate. Those are legitimate questions. Uh, and those are good thought experiments.
Hmm.
those are good exercises, right? Asking something that sounds wild is like always good practice, right? As long as you figure out if quickly that it doesn't work, you don't get stuck into it. Yeah, I mean, there are patterns in both the I'm pretty confident that there's patterns in the way that the managers the executives respond and the way that the analysts ask, right? And by the way, I think I mentioned that before, we rarely pay attention to the first part of the earnings conference call.
The announcements.
We rarely pay attention to that because it's just a summary of the hard facts, right? Of the hard metrics.
Mm-hmm.
Plus, there's all this politeness. Good afternoon, hi. Hope you had a pleasant day. So those are all discarded by the sentiment analyzer, for example. We don't care. Good afternoon is basically zero sentiment in there.
Yeah.
It just doesn't mean anything, right? That's why when you operate in a specific data regime, you have to tailor and fine tune everything you're doing. Right? But for sure, there's patterns in the Q&A section, and a machine can figure those out. And then you're asking, and there's patterns in algorithmic trading, right? And those patterns can be figured out as well. And then you can just do some sort of comparison between the two, right? And I guess the goal is to try to beat both.
Yeah.
Sure. I mean, I don't know. Maybe.
So, all right. If you could give us an analogy of for complete layman's terms on how your next iteration of like how your next paper is going to look like and what the model exactly is going to do, but in a very let's say allegorical kind of way.
I'll try to say it without the analogy first, and see if I do a good job at it, and then we can just figure out if we can play with it and come up with a metaphor.
I believe in you.
Yeah, thank you. I need it. I'm very stressed right now. Okay, so in that particular topic, right? We can talk about option hedging some other time. Right? We'll leave it for another podcast. So our goal, as I think I will just summarize it as basically what I said before. Our goal is to so far, if you look at the published work in that domain specifically of sentiment of news towards using the sentiment of news towards predicting returns, right? Usually, work focuses on immediate return, right? The return the day after or the day off if the earnings call is early in the morning or during trading hours, right? Yeah, because the time of the earnings call matters as well, right? So plain and simple, we want to see if we want to apply different models to extract the sentiment of this of earnings calls, and we're using S&P 500 data sets, right? That span 15 years, let's say, right? Or we even go to S&P 1500 several times, right? Because sentiment for lower market cap firms can be a little more, it can have more aggressive impact upwards or downwards, right? So we're investigating, but in any case, we're looking into applying several different machine learning models to extract the sentiment, and then see whether the sentiment index can predict 30-day, 60-day, and 90-day returns, not just immediate returns, if you also control for the earnings surprise, right? Okay. Earnings surprise is important because it's basically telling you how close were the actual earnings of the company to the predictions of the analysts. Yeah. All right. So if you see a surprise there, it might be that the surprise itself is explaining the behavior, not really the sentiment in the earnings call. Right? So you have to be able to control for that. Okay. So so we're trying to see if there's impact in the future. Now, if there's, and that's one experiment. If we see that there's no impact in the future, it's not necessarily a negative result, right? It is a result, right? So here we're trying to answer a question. We're not trying to build a trading strategy, right? That's the difference.
My
Right?
bad.
So it's
My
a little
bad.
bit safer.
Yes.
It's a bit safer. But we're not gonna stop there. We're also, as I said, trying to perform the same experiment at different times, right? We go back in time and try to see if sentiment information is digested quickly, right, and incorporated into the price. If the price is capturing that very efficiently nowadays, but wasn't doing it back in the day, we're going to have an answer to this other question, right? Which is, are markets now more efficient at incorporating sentiment, right?
Yep.
And of course, we're restricted by the type of data we're using, but it is something, right?
Great.
And what else?
I think that's it. That you covered all the bases.
And but that's the first step,
Yes.
right? Our next we want to push this forward and look into, as I said, look into where should we be paying attention. We want to go beyond sentiment because we believe that if you want to predict future behavior, right, you have to look into other dimensions of earnings calls and press releases and news in general, right? It's not just, as I said, topics and so on. Right? It would be as if you're trying to predict the weather tomorrow or in a month from now, 3 months from now, and so on. It gets harder and harder, right? So if you're just looking at all the data available today in order to predict tomorrow, maybe maybe that's all you need, and you're really good at it, right? But when it comes to figuring out predicting the weather a month from now, you may have to do more of a multimodal analysis, right?
And it's funny that you mentioned weather, since
I mean, it's an extreme example. It's not the same.
it's not an extreme example. Actually, I believe from maybe it's recency bias that we're doing a very poor job lately predicting the weather. From from my experience, I think 20 years ago were or maybe the weather did not have as many fluctuations, and that's my reasoning. It's I think the models that we had in the past are not the best suited models to capture the weather right now, and maybe that's just something that it might happen with what you're explaining right now. So maybe sentiment worked 10 or gave you like a competitive advantage 5-10 years ago, but right now it might not give something not an edge, not even some information about it. Maybe the numbers are the metrics that they have out there, they're enough to make inference about what the earnings call. But what you're saying, I think makes sense to get like a representation of the earnings call in a multimodal way, in a multidimensional way, and might not be topics, might not be even something that we understand. Like the machines or the AI might pinpoint, might find some patterns in the data that they're latent, and which one we cannot really understand or see, and then find those patterns that are in common in different situations and make predictors out of it for the long run and for future behavior.
Yeah, I agree. And so there's a few things here. First of all, you're right about looking elsewhere to be able to explain to predict things and also gain a competitive advantage. Basically, in my opinion, when it comes to trading, for example, although I'm not an expert there, if you want to gain a competitive advantage, you should look where nobody else is looking. Right. So if everybody's looking at sentiment for years now, you're not going to gain a competitive advantage by also looking at sentiment. Right. So this is if you're trying to build a trading strategy, but also it leads to legitimate questions. Right. What are the other things that affect the prices in the long term? Right. In the long run. Right. And that's again from the academic perspective, but also if you use, let's say, an end-to-end deep learning model, right? It's going to be a tough sell if you're in academia and specifically in economics or finance, right? Because there's always this pressure to be able to explain why your predictions are what they are.
Yeah,
right?
I think we're gonna talk another time about what explain means and what the general conception of explainability or interpretability is.
As one day I want to be able to write a journal in finance, and if someone asks, and use a deep learning model, right? And if someone asks, why does this work? What are the reasons this prediction is correct? I want to use Jeffrey Hinton's quote with as well. There's 165 million reasons why this works, which is all the parameters in the network, and that's if you're a reductionist, that's what it is at the end of the day. I gave you 165 million reasons why the prediction is correct. What else do you need? You can't possibly need more reasons than 165 million reasons, right? Maybe at some point we'll have to discuss this, but maybe at some point we'll have to find this middle ground where you don't have to understand all the variables and how they're affecting the prediction, right? I don't know.
Yeah, I
It
guess
depends
so.
on the industry. It depends on regulation. It depends on all of things.
Yeah, but that's a nice way to close it right now. I love the Geoffrey.
Just finish my
The Jeffrey Hinton's quote. One last favor from you, this is if you had to summarize this whole hour in under 10 words, how would you do it?
I don't want to. I don't want to talk about any takeaways here. I think at the end of the day, if you want to go a little bit technical, I would say you can. I mean, machine learning is a toolkit, right? Unless you're doing fundamental research in machine learning, and that's amazing if you do that. You should be looking around you. You're in a particular industry, even if that's agriculture, right? Or even if that's energy, right? Look into possibilities of applying this and to solve a business problem to disrupt that particular industry, right? I think it's about time that machine learning and AI penetrates more industries that it already has, right? And that's what we're trying to do in academia, just try to standardize it when it comes to finance and economics.
That is great. Thanks a lot, Zissis. You can
My
find
pleasure.
you can find Zissis on social media. I'll link everything below, and of course, it's his Google Scholar profile. Thank you, Zissis,
Oh, my pleasure, Yanis, and yeah,
and
had a lot
hopefully
of fun.
see you soon. Had lots of fun.
Well, we have a lot of topics to talk about, right? So
For
I'd be
sure,
happy
for
to join
sure.
again.
But it will be my pleasure. Thank you.
My pleasure. Bye bye.
Bye bye. This is it. Your mind is now bucked up. To learn more about the topics discussed or the guests, follow the links in the description. Now you have the chance to subscribe, rate, like, dislike, and review the show. Also, looking forward to hearing your thoughts in the comments. Awesome. Thank you so much for joining me, and see you next time.